Debt ceiling drama looms as tech stocks defy gravity. Will the AI rally continue? Will they or won't they vote to raise the debt ceiling? That's the question that is towering over the markets after the extended weekend break from trading. Over the Memorial holiday weekend, Washington negotiators tentatively struck a deal to raise the debt ceiling and avoid a default. Things were moving in the right direction until 2 of the 9 Republicans on the House Rules Committee said they were against bringing it to the House floor for a vote. 2 of 9. That sounds like a Star Trek character, but no. It's not science fiction at all. It's our reality. The U.S. could default because 2 of 9 wouldn't bring the legislation for a vote. Do I think that is going to happen? No. I don't care what side of the political aisle you're on. Both sides love spending other people's money. Both sides may brand it differently, but make no mistake, they're still spending taxpayer dollars on their agenda. That is the backdrop for trading activity until it gets settled. While that is happening, the market is pricing in a 60% chance the Fed will raise rates another 25 basis points during the June meeting. That hasn't stopped some of the high-flying tech stocks related to artificial intelligence. Not to be outdone by Nvidia's NVDA, 25% move in a single day last week. C3, AI, launched higher by 33% at one point yesterday. As you can see from the chart, C3, tends to pop and then sell off. Will that happen this time around? By the way, NVDA continued higher by around 3%, so there was no immediate profit taking after a 25% run in a day. The technology sector, XLK, has been on a nice run so far in 2023, thanks to the companies I mentioned earlier. And sure, you could say the sector has blown out of its trend lines and is due for a pullback, but we might only see a small pullback to that upper trend line. Yes, I'm saying that the upper trend line might now act as a line of support before the next move higher. It's hard to say, but given what is happening within the stocks that make up the XLK, I'm not about to assume a major pullback is coming, even if the Fed raises rates again. We are technically overbought and I'm not about to chase trades, but at the same time, I'm not expecting a deep pullback in the sector either. While I don't spend a lot of time on counter-trend trades, I had a number of people ask if Nvidia, Microsoft, and tech, in general, have gone up too far, too fast, and ready for a pullback. If you believe XLK is coming down or maybe staying flat and you want to look to trade that sector to the downside, I would look at the stocks that are likely to pull the sector down. Sure, Nvidia might be overdone, but I'm not going to spend time trying to do a bearish trade on that particular stock right now. I'd rather look at sector laggards like Qualcomm, QCOM, and Intuit, INTU. Here's QCOM and you can see the long-term trend is lower and it's had an explosive couple of days. My theory is that it won't be able to sustain that move higher, and we're likely to see it pull back from here. The 16JUN 120/125 call credit spread has a mid-price of 1.06. The trade profits as long as QCOM stays under $120 by the expiration date. Next is INTU. For more information on this trade idea and others like it, visit tradersreserve.com.